Good evening, everyone. Welcome to Medicine Heights and Livonia IBD meetup for April 2023. My name is Raja Ponnusamy, and in today's presentation, I'm going to walk you through the three indexes SPX, NDX, and the RSL. What you see here is the daily chart for the SPX cash market. It made a low in October last year, and since then it's going sideways to up. And in the last couple of days, and ever since we had our last IBD meet, and it's been going up in the last, especially in the last couple of days, it's just going up and down, up and down. What you see here, and this blue, it's 8 EMA, and the gray is 21 EMA. SPX is comfortably above these two indexes, the two moving averages, EMA. By just looking at this pattern, it seems that let me put my pen on. Okay. You can see that the market is going up this way, and the momentum is not going in the straight line up. I can see that it's kind of waning down. So, but the important point to note here is SPX cleared this resistance, and this was, you can see that it was a resistance. It cleared above, it became a support, broke down below, now it became a resistance. Now in the last couple of days, what we did, it actually broke the resistance, and now this is serving as a support. This is a good support. Don't know what is there around this 40-80 level in SPX, but you can see that how many times it was held. Even if you look at here, there is something in there in that level, and it's a very very key level. Market has cleared that level, and we are moving on the upside. We are comfortably above the 8 EMA. So what is the next for this index in terms of this pattern? I would expect it is still on the uptrend, but it's not going to be a straight line. The reason being, we moved way high too much, and the pullback was very minimal. But that means we still have a more room to go upside, but the move to the upside might not be straight line. It will be like this. That is what I'm expecting. There'll be a lot of chop and move, and that this is what I'm expecting. So how much more it can go? Look at this prayer resistance, and this was the resistance here. So, and again, this is going to serve around this point. It's going to serve as a resistance, which is another about 50 points. 50 points in the SPX, maybe it's like 1% move on the SPX on the upside. But again, this is going to be a very laborious move. It's not going to be a straight line, unless the earnings are outstandingly better and surprises to the upside. I'm to consolidate this point that the move is going to be very laborious. You can see that on the RSI is not making a move on the straight line. No, it's already there is a divergence between the price and the RSI as we speak. So that, in considering all things together, market is still on the uptrend, and we have not broken anything to the downside. So I would expect it to continue to go upside. So we have a little bit more room to go. And if we clear this 4200 in SPX, then the obvious next level is going to be 4300. This will be a good level. You can see that this was a previous resistance, and also more importantly, this coincides with 61% retracement from last January high. So this is a very important level. So if we march towards here, then this would serve as an important resistance level. So we have two levels to watch. That's 4200 and 4300. These are two levels on the upside. So having said that, we should not rule out anything on the downside. What would be the pattern that can play out on the downside? As long as this line holds, we are good on the upside. But for any case, if the market has broken this line and moved to the downside, then I would expect this would be a resistance around this point, and then trying to come back down. The trend line is the obvious first target, then the previous low, which was made in March, that could be the next target. So that is on the lower side. So all we need to watch on SPX is that it should not go, or it should not close below this 21-day EMA. If it closes below, and also it is below this um, 4075 level, then there would be a lot of downside momentum that can kick in, and we can look on the downside. So the primary scenario is moving up. This is my secondary scenario. The primary scenario is previously whatever I stated. It can go up like this. So that is my primary scenario of just looking at this SPX chart. Now moving on to the NDX. So if you look at NDX also in the same kind of a boat. You can see that this was a resistance, and it served as a resistance in 2 points. Now it comfortably broke above, and now this is serving as a support. So this is how the pattern works out. The resistance becomes support. Now this is a support, and also you can look at this is a 21-day moving EMA moving average. Contrary to SPX, in NDX, I can see that there is a momentum divergence. This was the peak. If you look at this peak, look at this peak. But if you look at the price went high, but the RSI did not make to the high. So RSI is well below here. So this is weaker, and also SPX, the NDX has tested its resistance, and now it's just backing up from here. But I'm still looking at it may move above in the laborious manner until this point. But this is a primary scenario for NDX. But for in any case, what if it broke to the downside? So let's say if it breaks the downside, then possibly this becomes a resistance, and we can look for on the downside. The downside, this will be the target. This is my secondary scenario. So the primary scenario in both the indexes, the market is going to go up with earnings kicking this week, and a lot of earnings going to come next week. I would still anticipate market is predicting, or a market is shooting for moving higher, but that move is not going to be a straight line. It's going to be a laborious. As long as NDX does not break down from this 12880 level, we can still look for on the higher side. So this is the pattern I'm looking for in NDX. So moving on to Russell. Out of all the three indexes, Russell is being the weakest. The reason being, all other indexes are at their higher, all at around closer to this level. If you look at SPX or NDX level, but Russell is at the bottom of this range, so it's a lot weaker. So what is by looking at this Russell pattern, what is this telling us? Again, let me clear this. Look, there is a trend line here. This is the trend line. It's coming from the top, and it's uptrend line. As long as Russell does not break this trend line, so this is the line in the sand on Russell, which is about 1771 is line in the sand. If it breaks below 1771, then you would look for a retest of this low. That would be a very possible scenario. As long as this 1771 level is not broken, then it can move up. But again, there are a lot of resistance it need to clear before it can move higher. So this is being, if any case, if SPX or NDX breaks its support level and move to the downside, then the best possible, if you are leaning towards the short side, then possibility Russell may be the good index to short, because this is the weakest of all. And if you're looking for a long side, then SPX may be a better index to play because of whatever analysis we have made in the previous chart. So overall, SPX is the strongest, and NDX is hanging in there, and Russell is the weakest of all the three. And if Russell breaks down below, then the first target is going to be here. So that's how the pattern I'm looking at. Other than these three indexes, I just wanted to point you, there is one more with everybody's interest, many people interested in, is that's natural gas. What you see is the futures chart for the natural gas, and natural gas, the high was made in last August, and we are at the bottom of it. It came from $10 to almost $2. It's enormous move on the downside. But what is interesting on looking at this daily chart for the um, natural gas is that it cleared there was a low made around the $2 mark. It was then it consolidated, it went up, then came back down, retested the low, and finally last retest was here. Then we can see that it's moving up. This is the what you see here. This is the 8 EMA, and what you see here, this is the 21 EMA. It cleared both of them. But what is more interesting is that it cleared the resistance point at 2.24. It's cleared the resistance, and the RSI is moving to the upside. This natural gas also, it's moving to the upside. It very well broke above the resistance. So the expectation is that it should not come down below here. Okay, so that is the expectation, and the pattern will play out. How this pattern is going might play out would be, maybe back it come from here, retest this prior resistance level, then shoot up. So this is the primary scenario I am looking at for the natural gas. So how do we play this? The way to play this would be using the ETF, which is Boyle. Okay, so here is the Boyle ETF. Oh, sorry. Okay, so here is the Boyle ETF, which came from $140 last year to almost $3 this year. You can count the percentage move. But what is interesting here is that you can see Boyle ETF has cleared this level. This level is 3.6. 3.6 is the level Boyle cleared, and we are well above the 8 EMA, and we are just under the 21 EMA. So this may be a better play, as long as I would expect this to come down and move up, and there's a huge potential move on the upside possible, as long as we don't come back into this range. So this would be a much better play um, on the boil, but watch out for natural gas, natural gas future chart rather than the boil chart, because boil is a two times long ETF of the natural gas. So there is a huge potential to the upside for the boil ETF. Okay. That's all I wanted to share with what I'm thinking the market is heading towards, and hope this is beneficial to you. Thank you so much, and have a good evening.